Hello YouTube! Today this video was sponsored by the color green because we were looking for more relief and we got it. These bulls did it. They broke us through our first downtrend. We closed above 400. SPY and QQQ are synced up once again. S&P is over 400 and QQQ is over 300. So let's give a round of applause for these bulls coming out of tech. We've got Tesla out of finance, we got Bank of America out of healthcare, we got DHR and all the rest of these. And what else do we have green? We got a lot. There was a lot that happened today. Unfortunately, we heard that the Queen of England has passed away, and our thoughts and prayers are with everyone in England. But we also know that there was Christine Lagarde speaking, Jerome Powell speaking, and all of this data all came through to today. What we're going to try to do today is try to make sure we understand what is happening, because now that we are back here at this 400 area, what are we noticing? Oh my goodness, we got two back-to-back green days. When's the last time we had that? Oh no, it was right before we got that big old fat fade, right? We got a big fat fade into Friday, and now the question is, are we going to repeat? So what I want to try to focus on today is the evidence versus what we're seeing on the chart, as mostly a follow-up to what we did yesterday. Again, what are we noticing? There's breadth, there's depth, but it's mostly focused into finance and healthcare. If we look at the last 1 week performance, again, including roughly last Thursday or Friday of last week too, becomes much more clear. Tech and electronics are down, right? Tech services, electronic technology is down. Almost everything else is green. Energy is basically unchanged. The other things I really notice is that as I scan across my assets here, US dollar and euro are at 1. They're at parity again. We note that 2-year yields are up, 10-year yields are up, inversion is up, dollar's up, S&P's up, QQQ is up, VIX is down. Otherwise, we got gold down, FDAX down, we got Apple down, Goog down, and every major ETF other than utilities, emerging markets, and China are green. Whoa! So what does this mean? What happened? And what would we have expected to see on the chart? Because this morning I shared a really big update with our team, meaning our pre-market stream, where I said that after the market opened, we got positive data, and positive data is supposed to be negative. And going into the market open, yes, this initial jobless claim was interpreted negative, where we had a move down, but the relief came back in, dip buyers showed up, and we bought it up. So what this tells me is that good news is now unknown. Is good news good? Is bad news good? I don't know anymore, because up until yesterday, good news meant that the Fed had to continue to hike. And Jerome Powell had a Q&A dialogue today. So we're gonna try to provide an update here on the why bull or bear. And what I would note is that we are still below the 50 weekly. The bull case. Fed pivot. I have a couple articles to actually talk about right now. So let's flip to what Jerome said. And I'm looking at 4 articles here, which give us a different perspective, but give us a story by the time we get to the 4th one. Jumbo rate hike. Rate hike is in play as Powell sticks to his hawkish view. Okay, hawkish view, but bullish reaction. Interesting. Fed Powell's hopeful inflation can be tamed without pain of Volcker era. Yikes, right? He's chapping his lips there. He's like, yeah, tight butthole. I'm not sure what I need to do. Am I loose enough? Am I tight enough? I don't know, right? But he's all puckered up here. So that's the second article. Third article says, Powell, and again, his lips are puckered up again here, right? Yeah, his job is tough right now, right? They're choosing these pictures on purpose. Powell is looking well past the next inflation report. Market bulls think next week consumer price index report will be the catalyst that allows the Federal Reserve to turn less hawkish. They better think again. Oh no. So there is the story where I think we understand the reason why we're bullish. They're looking at this report. There is one more thing here. This is now from September 6th, which was 2 days ago on Tuesday. Goldman's head of strat, I think he's the global macroeconomist, Jan Hatzius, sees encouraging signs that the economy could still achieve a soft landing. Could. Right? Hope. Are these the words that we like to use on this channel? The answer is no. But we cannot fight the tape, and the tape right now is pointing up. So as we look to all of these headlines, the question is the market misinterpreting the rhetoric once again? That is what I don't know. So as of right now, there is still shallow recession, which is possible. The Fed pivot is, again, baked in. I don't know if it should be. Over the 50 DMA. Well, we're pretty close. 1.65 is that number. So what the easiest way to try to think about this is now we understand where we're at on the weekly chart. But since tomorrow is tomorrow Friday? Yes, it is. Tomorrow is Friday. We're going to look here to our weekly chart. We are at the high of the week. We are here at 400.7 and after hours. 400.38 is a close, which means that we are almost here to resistance 2, which is our daily gap, our June 9 low, our 50 DMA, and is right around the last week open. Last week's open is at 402.2. As a reminder, most volume happens at the open and the close. What does that mean? On the weekly chart, that would be for Monday and for Friday. So if we held the low, we're near the open, but what we had for the last 2 weeks was a notable slam. Again, here's the Friday candles. Look at that fat bar, right? Look at that fat one right here as well. There's the, right here. There's the Friday one. It's the rejection off the 50 DMA. So what we had going into the Friday was 2 green days where we close with higher highs and higher lows. Here we have 1 green day where we reverse and then puke it. I don't know. So if we're seeing a notable change in tone, that good data can be positive. And we note that we're right back where we were before. There's all this liquidity inside of here, and the big boys are back. We moved fast. We moved dirty today. So if we're going to get that change in tone, I really want to see where this weekly chart closes out. The closer we can close to the high of the week, the more pressure is building up, and the more that there is a bull case being built. I would also note that here on the thumbnail, it should show there is an inverse head and shoulders. So yes, as of right now, we're still maintaining an inverse head and shoulders. That's a nice pattern, but it means that we could still shoot down to 380. So is 380 good enough for us to hold? I don't know. And the reason I say that is because when we go here to our weekly chart, if we're not able to hold roughly 395 for this week, but closer to 398 to 400 for next week, we're going to stop going up on a weekly closing basis. And that means that the dominant trend is still down, and this is just another dead cat bounce. That's all it means. I would love to see more green volume tomorrow, but noting that this week is a short and trading week, so a better indicator for us would be by looking over to the E-mini futures. Again, there's one less session, but this looks a lot better here compared to the previous weeks for volume. So putting this all together to make sure we have an action plan for tomorrow, because we will have a Friday stream for you to come to. And let me actually get that queued up here so you guys know, if you don't already. We do stocks every day, which is why we're called Stocks Today. Tomorrow will be no different. We stream for the final hour. The stream is prepared here, and you will have a great time with Mason tomorrow. I'm going to be away from my desk. So with that said, let's move forward to the last parts of the show. If we understand where we were from the weekend deep dive, we understand the Fed pivot is baked in, being unbaked, being rebaked. Yeah, we're half-baked. Shallow recession. I don't know. Over 50 DMA, well, that could get uncrossed this weekend. 200 DMA, 50 weekly in sight. Well, let's focus on the 50 DMA first. So that's what I want to focus on. The bear case, yes, everything here is still very strong. So as much as I'm seeing short-term momentum, the keyword being short-term, meaning daily charts, the weekly charts are still screaming bearish. However, this chart right here is very similar to a chart I am looking at on the hourly. And what I notice, we have a falling wedge or a pennant or a triangle. So what this means is that inside of our hourly chart on ES or the E-mini futures, what do we have? We got that same pattern inside of here. That is correct. And we actually held it. I called that out into the close, which means that we've now, today we pushed off of our 200 to our 50, bounced over, and we held it. We actually backtested and passed as well. So right inside of here, this is a key pass. And it tells me that as long as this holds up, we're looking for more, not less. The 50 DMA is only 15 more points away for us, and they're trying to go for it. They want it. So if the bulls are able to capture some short-term momentum, I think it's going to be right now. What we have to recognize is that we're still inside of a wider pattern here, which is a megaphone or a big funnel lower. So as much progress as we're making, we're still stuck in a massive range where every time we hit the top and the bottom, buy, sell, sell, sell. I don't know. We're getting closer to the resistance area, and how we act as we get deeper into resistance will be very telling of where we're likely, not a guarantee, where we're likely going to go next week. Something else which is really important to moi, or me, is S&P and QQQ being coordinated or synchronized here. S&P closing out at 400.4 basically. QQQ closing out at 300.5. They're within 14 cents of being at the round number. What does this mean? It means the market is orderly. It is moving in an orderly fashion. So if we get an orderly move up or an orderly move down, I don't particularly care. The price action becomes much more clear with more volume. And with the big boys being back, yes, the charts are getting easier to read and we're better able to decipher what the data tells us. The last thing to look at, because tomorrow is going to be Friday, is just, actually I got two more things I want to look at here. So now we got some options data. Whoa, right? 420. Elon Musk would be proud. That's a hell of a lot of calls for tomorrow. There was open interest as well, and they were buying it up to 405. We could push to 405 tomorrow. Is that what's going to happen? I don't know. 402. And what's so interesting about this for me is that the volume is everywhere, but what I want to focus on is this number right here, the change. This was shot just now, so at, 4:17 or just after MOC close. At 4 o'clock, this was at 20 cents, which means that as much volume as there was, as much open interest as there was, from the yesterday close till today, they only gained about 10%, which means that's a lot of risk to hold on to just for 10%. And now if they're going to hold on overnight, that seems even riskier unless they are convinced we're going to close at or near the high of the week. What does that mean? For these 400s to get their money back, we have to be at 400 plus the premium of $2.20. We have to be above last week's open at 402. Do you see it now? That 402.2 area? Yes, that is exactly what those 400 calls are worth for tomorrow. So if we're going to close with them getting their money back, it means we're going to be over last week's open, over the 50, and basically over our R2 pivot. That gets us at a high of the week close. That'd be pretty bullish. Now, the last thing to look at is that this bear case is still very strong. We're now going to go back in time to look at the reason why I was very bearish. So these are inverse alerts. Inverse Russell, inverse S&P, inverse DIA. We got the dollar and we got TNX. Every one of these is an investment alert, which is telling us that they're currently above all these prices. So as long as we are above 23, 15, 34, 106, and 287, the bear case is still really strong. This is a back test. However, today and this week, we had hundreds of swing alerts, which are coming through on the bull side, which means that there is significant pressure building up on a shorter time frame, which could feed through to continuation on an investment time frame. So if you're interested in seeing what those alerts are, I encourage you to just go to the link in the description. Or if you are a member, I went through and laid out some of my top ideas inside of the ideas channel. And if not, you can always ask for help. You can always post on the help desk. And otherwise, I wish you beautiful people a beautiful end to the week. I wish you a nice time with Mason tomorrow on the live stream. And if you want to learn more about how we got prepared for this week, or what we thought would happen going into here, I encourage you to watch the video that'll come up here in a moment. Otherwise, thank you so much for watching, and I wish you a great end to the week. Thank you.